Because folks,
Strongman Personal Finance.
ain't no dang jokers.
Alrighty, folks, big video. So in this video, I want to address the last time I was ever bullied in life. Hey there, folks!
You're spending more of our money on those stocks. I'm gonna beat your ass. I'm gonna beat your ass.
Boy, did I get brutalized today.
Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we got to talk about Coupang stock. Now, this stock is near and dear to my heart because if you guys didn't know this, I actually lived in South Korea for 4 years. That's right. My dad was in the military. And I went to Seoul American Elementary School for 4 years. And it was great. And I still have an obsession with Korean food. I'm a Korean boy in my heart. And I played a lot of StarCraft too when I was there. The original StarCraft, not the clown StarCraft. Anyway, let's talk about Coupang. We're going to dive right into it, okay? Now, did I do a ton of research on this stock? No. Am I going to buy this stock? We'll see. But there's some concerning things that are going on with this company by itself and with the whole demographic and war that is still ongoing in Korea. So this is the Coupang, about Coupang.com, okay? Basically think of Coupang as like kind of like an Amazon, but in South Korea. You get same-day deliveries, even hourly deliveries, for basically whatever you want. It's basically Amazon of South Korea. We can go down and look, but one thing I noticed is that, number one, you get hourly deliveries of like fresh groceries. That's pretty freaking cool. And they have over 100 unique fulfillment centers where 70% of the Korean population, that's a big part of the Korean population, lives within 7 miles of a Coupang logistics center. So I've never personally used this service, but I watched a couple of YouTube videos. And people were like, yeah, man, like I order something and they get it to me like within a couple hours or by the next morning. It's a pretty cool service. And I would probably sign up for this if I lived in South Korea, which I did, by the way. But, you know, I don't live there. And that doesn't mean you should invest in the stock. Now, let's go look at the website. Okay, this is the website. What does this remind you of, ladies and gentlemen? Amazon, perhaps. Oh, diapers. They know who they're marketing to. Olive oil, big sale. I like how that's in English. Now, let's go look at some of Coupang's most recent earnings. So I briefly perused this, and then we'll go into a more like broad overview of the company's financials. But they reported some interesting things here. Now, we can see in their second quarter 2022 results, they had total net revenue growth of 12%. That's decent, you know. However, there's one little thing that immediately jumped out at me. Their active customers year over year only grew by 5%. So if you're buying this company for the growth story, number one, the revenue growth is okay. Okay. I guess you have some like currency adjusted growth right here. But the active customer growth, 5% year over year, that's a little concerning. And you can see the total net revenues per active customer only grew by 7%. Now, they've had improvements, massive improvements in gross profit, but we can see they still have a net loss. And when we go look at the overview of the company, you're going to see that, at least I believe, they've never been profitable. But there's other issues with this company and in the whole region that we need to talk about. But their last profit margin was 1.5%, negative 1.5%. So that's not horrible, and they're getting better, but we'll talk about some other things. So here's stockanalysis.com. Sadly, they don't pay me to advertise their product, but it's a free source you can use, stockanalysis.com. It's great. It's a simple way to like get a brief overview of the company. Oh, what's going on? What is Coupang? Blah, 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 blah. Ticker symbol CPNG. And you can see some of the financials. And it's generally accurate. Obviously, you want to look at the financial reports that the companies are putting out because they give you a lot more detail. You're not going to get that here. But this is helpful, okay? And you need to be careful because the revenue on here, it might not always be in USD. But for this specific company, it is. Now, before we dive into it a little bit more, let's look at the price action of Coupang. So it looks like it's only been trading since March 8th, 2021. What a great time to IPO. And at least, the 5 years. Yeah, I guess they've recently started trading. Ever since it started trading, it's been down 52%. And I bet you a lot of people bought this stock because like, oh, it's the Amazon of South Korea. I mean, it's kind of like Baba or Amazon, you know? Well, Alibaba is profitable. Amazon is generally profitable. Coupang is not profitable, okay? Let's look at the trailing 12 months. So for the trailing 12 months ended the last quarter, they have 27%. So I guess they're using the currency adjusted metric of 27%. But you can see, if we go back to the annual, they've had some pretty significant revenue growth, but it looks like it's starting to slow down. Now, when you look at profit margins, we could see that their gross profit is slowly improving, but it's not that high. I mean, an 18% gross profit, you want a high gross profit because that's higher on your income statement. You have all your expenses besides your cost of goods sold, selling, general, administrative, interest, taxes. All that is after gross profit. So you definitely want that to be higher. Now we go down and look at operating margins, negative 5%. Profit margin, negative. Free cash flow margin, negative. Shares outstanding. So if it was trading, if it went public, it looks like in this quarter, they've been pretty significantly diluting shareholders. I mean, you can look at the shares outstanding. Yeah, this is roughly when they went public right here. Look at the shares outstanding. Okay, they haven't grown massively, but there's probably going to be some dilution going on because they probably have negative operating cash flow. We'll see. But overall, you can see it's an unprofitable company. Let's go look at the balance sheet. Now, when you go on here, always remember to click the quarterly balance sheet, which will show their most recent balance sheet. Because if you're looking at the annual balance sheet, this is the balance sheet ended December 31st, 2021, which isn't going to give you the most up-to-date information. So if we look at the quarterly balance sheet, they got roughly $3 billion of cash. Let's see, 18 million of receivables, big chunk of inventory, and total current assets of 5.1 billion. We go down to current liabilities. They have fewer current liabilities than current assets. And they have basically enough cash to pay all of their accounts payable. So I don't really see this company instantly going out of business. Generally, the more cash they have on their balance sheet relative to their short-term debts, the less likely they are to go out of business. Okay. So current ratio doesn't seem that bad. Now let's look at long-term assets. So they have roughly $3 billion of long-term assets, mostly property, plant, and equipment, and thankfully not a lot of goodwill. Goodwill is an intangible asset. If you acquire another business for more than the fair value of its net assets, you record the plug, you're paying more for a business than it's worth on the market. The plug is to goodwill. It's basically just a plug on the balance sheet. And goodwill could be a problem because if you massively overpay for a company and you have a lot of goodwill, like Teladoc, and there's a write-down, you're going to have a massive loss on your freaking income statement, which flows into your balance sheet, into retained earnings. So we can see they have $3 billion of long-term assets, and they only have $2 billion of long-term liabilities. Now, one thing that always would scare me is if you look at their long-term assets and you see, their long-term liabilities, their debts, and you see they're greater than their property, plant, and equipment, their long-term assets. Because if you think about it, let's say you buy a house, right? You pay $250,000 for a house, you take out a $250,000 loan, you don't have a down payment. Eventually, you're going to amortize that loan balance, and theoretically, the worth of your house should be higher than the debt against it. If you have a higher liability than your asset, you're underwater. So it really concerns me when I see a company that has long-term liabilities far in excess of their long-term assets. Here, it's not that bad. So I personally don't think they're going to go out of business within a year. You can do your own research. And their whole balance sheet situation really isn't that bad. Now, they haven't returned any value to shareholders because they haven't been profitable. And looks like they've never been profitable. How do I know that? Because I can see retained earnings getting more and more negative. When a company has a loss, it hits the bottom of the income statement, and then it gets closed at the end of the year into what's called retained earnings. Retained earnings is not just a pile of cash. It's just an accounting record of the cumulative profit and loss of the company since its inception. So since inception, on the accrual basis of accounting, this company has lost $6 billion. Okay? But the common stock that they've issued has more than made up for it. And you can see common stock keeps going up and up and up. They're issuing shares. Now, let's go ahead and look at their statement of cash flows. So the statement of cash flows is important because it tells you where their cash is coming from. Is the cash coming from their operations? Is it coming from their investments? Or is it coming from financing, which is debt or stock issuance? So we can see they have negative operating cash flow. So from their core business, they are burning cash on a net basis. Burning cash. How do they get cash? Because they have to finance, they need cash to run their business. They're burning it. And they're spending money on capital expenditures. That's like buying new property, plant, and equipment. Well, the money must be coming from either debt or stock issuance. Okay, we can see a lot of their money came from their initial IPO. We can see that. We can see they got roughly $3.4 billion when they IPO'd. That's a lot of money. And they've issued a little bit of stock. You can see like the cash coming in. They're issuing a little bit of stock. And they've taken on some debt to finance their operations. But overall, it's unprofitable. It's got negative operating cash flows. And it's a little concerning to me when you go look at this, and this immediately caught my eye. Their active customer growth isn't growing that quickly. So they're really going to have to work on like really improving the revenues from their customers. Now, there's another issue that I guess a lot of people don't talk about. Now, everybody says like, oh, China has a demographic problem. You know, why would you invest in China? They're about to, grow old before they get rich. Well, you want to talk about demographic problems? Look at the birth rate of South Korea. Every woman, on average, has less than one child. What do you think is going to happen to the South Korean population over the next couple of decades? This is worse than Japan. This birth rate is insanely low. That means they're going to have a very old aging population, and they're not going to have a lot of workers going into the future. And this is going to have some kind of effect on Coupang. Maybe it'll help Coupang because a lot of old people will be at home and they'll be ordering from their phones. But older people also don't have as much money because they're not working. So when you're thinking about buying or investing in like the South Korean economy, I mean, yeah, they have a great economy. They're a decently wealthy nation. But this birth rate is like insane. Like it blows my freaking mind. So this is going to have drastically bad effects on South Korea. And there's another issue. North Korea. That's right. There is a communist dictatorship on the border of South Korea. And when I lived there, they told me, like I was living in Seoul, Korea, and they said, oh, the North Koreans, they could literally fire artillery shells and they could hit Seoul. I was like, what? What am I doing here? This is another big risk because you never know what North Korea is going to freaking do. They're a horrible communist country. And if they get desperate enough, they might invade the South. I don't know. Or some war might be sparked. This is a risk you need to consider, even if it's remote, that there's a communist dictatorship with a massive army on the border of South Korea. So when you look at Coupang, it's like, okay, they have negative operating cash flow. And they're basically just living off their initial IPO cash. That's what it looks like to me, with a little bit of debt sprinkled in. And their total revenues per customer isn't growing that quickly. Their active customers are not growing quickly at all. They have an insanely low birth rate. Like, this is out of control. Look at North Korea's birth rate. It's like double. and you have the whole dictatorship. I'm staying away from this stock personally. So we'll do some comments, see what you clowns got to say. Big cash. I mean, it's not a horrible cash burner, but they still haven't shown they're profitable. And that slowdown in growth, that doesn't look good to me. $30 billion market, $2 billion float with no dividend. Yeah, not really my thing. VT, my PP. Good one. Yeah, people make fun of Bob. It's like, oh, come on, at least Bob was profitable. And there's 1.4 billion people in China. Oh, but Coupang, bro. Coupang, my Opang. Will you be able to reach $1 million net worth by 2030? That depends on the stock market. If the stock market doubles in the next 8 years, yes, I'll be a millionaire. If not, then no, I won't be a millionaire. And I don't count my home as part of my net worth. This makes Macy's stock look good. Yeah, it's not I mean, at least you can see they're getting closer and closer and closer and closer to profitability. And at some point, I'm sure they'll be profitable. Their gross margins aren't insanely high. So that's just like a quick perusal of the financials. Bill Ackman was an early investor prior. I'm sure he found a way to make money. You know, usually the people that get in early always make money. Coupang used to be in Bill Gates' portfolio. How'd that go for you, Bill? Coupang is another Masayoshi Son stock. No wonder why he's forced selling his Alibaba at a massive. He has to take the money from somewhere to. Yeah, let him sell his Alibaba. I don't really give a crap. Looking good, Took boy. I don't even know what that means. How can I invest in North Korea? I don't know. You know, well, they're communists, but they don't have a stock market. But China does. Oh, that's weird. Strongman, do you think we can go all in with Ari? Oh God, I'm gonna ban her name from this channel. Oh, girl in a car, she's hot. Is Coupang the future? No, it's not. Buffett been dumping Chinese stocks. Didn't he sell like a small stake in BYD? I mean, I think he still has a huge position in BYD, and I don't care what he does. Any thoughts on Oh God, I already cut. No, garbage. That is worse than freaking Coupang by leaps and bounds. I'd rather buy Coupang. I'm not saying you should buy any of this. I'd rather buy Coupang than freaking Jumia. That company is hot trash. Woo! Passionate. All right, guys, that's it. Hope you enjoyed the video. Does Coupang sell Sprite Tech pants? I don't know. I don't think they do. Actually, let's go look. Sprite Tech. No, they don't. This is that. Definitely do not buy the stock then. 100%. I'm going to buy LMT and knock. I'm buying VT. North Korea must have a ramen noodle company. I don't know. All right, guys, that's it. Hope you guys enjoyed the video. Hopefully you learned something. Or, you know, you can go watch a grifter slam. Me, Kevin farted. Oh, my God. Jeremy had a fight with his wife. Oh. Jeremy went to the doctor. And he has syphilis. All right. Cheers.